It's useless information. It's wasteful energy. But unfortunately, young men will take that as yeah, I'm a GOAT. I'm the greatest to ever do it. I'm a king. Come on now, stop. Anybody's opinion of you, whether it be high or low, has no direct bearing on your performance as a trader unless you allow it. Don't romance these little relationships that are laid in front of you where people can worship you or troll you. Don't even give it any energy. Don't give it any energy, because if you spend time in the market and you're looking for your setups, are you thinking about Carl before you put your trade on? Are you thinking about that person that you just can't wait to rub their fucking nose in it? You can't wait till this ends so that way you can say, hey, remember when you told me this, and this? Chances are, if you're taking that trade and you're thinking like that, you're not following your model. You're trading impulsively, like a retail trader would. You're doing something external to the model. You're looking for a reward, an emotional or psychological reward on the other side of that trade, which means that you're most likely not going to see what? When the market stops telling you it's going to continue what you're hoping it's going to deliver to. You won't recognize when you're finally offside because you're holding on to some kind of external proof that you want to give to somebody else. Instead of saying, this is my model. I'm waiting for it to be in low resistance liquidity run conditions. It's the right time of day. There's manipulation. I'm trading against that manipulation. I'm now trading against what retail would see, and it's the right time to do it. So everything's obvious. It's going to draw to this liquidity. I'm on side. And then when you get the trade on, you're just constantly monitoring everything being equal. You're not looking for some external thing to pony and showcase to somebody. You're following your model because you know following your model is going to yield you positive results. And you're not counting your money before you get it. You're not looking for any reason to run away from your trade because you're uncomfortable. You're submitting to it. Retail romances the uncertainty. They trade this larger position that they really can't afford to take as a losing trade if it's wrong. But they believe, what happens if I'm right? It's like winning the lottery. You are trained to not think that way. You're thinking, how can I manage the risk to such a degree that it's the smallest and I can hold on to the maximum terminus target and then let the compounding effect of pyramiding new positions while never really increasing the underlying risk. That is a professional mindset. We don't romance the uncertainty. We embrace the uncertainty. We don't have any control over the market once we enter our trades. But retail is going to hope and pray. They have hope and pray model. Hope and pray model is not a model that is consistent. Not in terms of profitability, but it is a model that's it's consistently delivering losing traders. Blown out, blown accounts, lost funded accounts, failed combines. Hope and pray model is not something you want to be doing. So we look at things from a time and price aspect where we can say, okay, this is what is reasonable. And we have tools in our repertoire that help us determine whether there's an edge, whether there is a bias, where the market should draw. When the market is created a jaggedness to it. On the downside, sell side's been delivered and it's been done with multiple passes lower and they have smooth relative equal highs just above us. That's not complicated. We're not looking for harmonic patterns. We're not looking for continuation patterns. We're not following the trend is your friend horseshit. We're looking for where are the orders that's going to be consumed next. We've already disrupted the market to the downside. We've done that with a lower gap opening. So we have a discount opening gap. We're still inside the first 30 minutes. And there's relative equal highs that are still above half of the opening range gap. So that means we have something we can trade long because the gap is indicating that first 30 minutes bias is bullish. And when it trades to half the gap, then we have to see, does it want to go higher? If it wants to go higher, then we can trust it's going to go where? To the relative equal highs. Because it's already done the damage by making things jagged to the downside, and it's going to want to reach for opposing liquidity. That's not a complicated thing. That's not religion. That's simply looking at, okay, yeah, the market's done enough to try to entice people going lower. Every little short-term low has been taken, and that means that they have engineered sell-side liquidity so that way they can buy it at a cheap price. They're not going to buy it at a cheap price and not wait till it goes higher to sell it at a high price. And that's what smart money does. It engineers liquidity. They buy that liquidity if it's below lows, and they hold it until it goes above old highs. That's it, folks. That's all it is. That's all this is. It's the game of hot potato. Remember as a kid? These little games you used to play, red light, green light, mother may I, all these types of things. Well, it's like, here's the hot potato. You hold it, and then you got to pass it to somebody else. That's what's going on all day long. And that's why I called that little drill, that exercise, volatility pinball, because you're constantly banging around, taking the buy stops, taking the sell stops, buying here, buying there, selling here, selling there, looking for inefficiencies, the fair value gap, use as your entry mechanism, find a reasonable stop loss, and where's the next draw to go to. And it trains your eye to see it that way. And then when you start trading with a 5-minute chart like that, and then you start trading a 15-minute chart like that, then you start trading a 1-hour chart like that, then a daily chart, and then you look at the market like that through the lens of a weekly and monthly chart, you have an ability to look at time over any given time frame and use the same logic. And then if you can start doing that with a weekly chart, you can see where the market's likely to go to for weeks, not just right now, present week, or the week that you're trading in, or the week to come. Like right now, we don't have the market open. It's Saturday. So applying what you're doing and practicing with that volatility pinball drill, desensitizing yourself to entries, if you start looking for that same idea on a weekly chart, you can see, oh, the market's most likely going to draw down to this old low here. Does that mean it's going to happen in 1 week? No. It just gives you a long-term or intermediate-term draw on liquidity. So that way, you might be a buyer or seller throughout the week, but you can anticipate that your larger short positions with the most leverage will be placed on shorts, aiming for that weekly draw on liquidity that may be beyond the scope of this present week's delivery. It might only go down a couple hundred handles this week, but you're looking for it to trade down 1,200 handles. So it keeps you in check and telling you, don't try to look for the long that it calls the bottom. Focus primarily on looking for environments where the 15-minute to hourly chart runs above relative equal highs or an old high, and you're going to anticipate that, setting the next leg for a price lower, delivering to that weekly draw that is going to be way beyond what you think is going to happen just in 1 week. So that's embracing the uncertainty. These are things that are likely to occur, but you're not lying to yourself and saying it can only happen in my hands favorably and not unfavorably. Retail likes to lie to themselves, and they attribute all their success to things that are outside or external to why price is going to go up and down. And that's why they get emotional. That's why they show outbursts on social media, either in tweets and YouTube videos and live streams if they're doing it live. They get real emotional. They get real volatile. Or they get real quiet and are angry. Or you can hear their breathing. Or they'll quickly have to dismiss themselves. Okay, I think I need to take a break now. And they're done. That's not somebody that's in control of themselves. That's not somebody that has a model that they have seen and trust and they believe in. They have something that they're just using as an excuse to get in. Some catalyst that caused them to do something. Just like that girl at the end of the bar. When you're married and you're out there hanging with your boys, you're not going to do anything wrong, but you've been drinking a little too much. And she's giving you that eye, that look. And you're thinking, man, I probably could. And she's thinking, I probably could take more of his money tonight. Then you're going to go down and you're going to talk to her. And you didn't go there for that reason. But now, circumstances as they are, you now found yourself in a situation where you're trading like retail. And you're about to get margin called. You're inebriated. You don't see the risks. You don't understand it. But retail looks for those types of instances where, yeah, let's find out what happens if I do that. And if I'm right, I will say this because my model is good, because I have this indicator, I have this thing, I use the school of logic of Wyckoff, I use this Elliott wave, I use something else, point and figure, whatever. And none of that stuff causes markets to go up or down. And that's why they have to constantly go back into social media to find encouragement. Because deep down inside, especially now because I've been out here preaching against all that stuff, they know that stuff doesn't work. But they don't know how to do what you're doing. They're only stuck in what they have and their religion. And they are in a cult. You're not in a cult. They are. They're believing things that are not true. They're worshiping people that are not in any position to be worshipped. They're following logic that's flawed. And they're in constant seeking of outside admonishment, encouragement. My community, my traders, the folks that I've trained that now they have their own model, they are the one encouraging people. They're not seeking encouragement. Have you noticed that? I create leaders, okay? Alphas, the ones that want to be the lead dog, the ones that are ahead of the pack. If you're not in a position where you're trying to be lead dog, you have the same perspective all the time. The lead dog's ass is in your face. The scent never changes, the view never changes, and you're always following. I'm training and teaching you all to be alpha, all of you. You're all lead dog. You're not second in command. You're not, in the back of the pack. You're all being trained to see things that way. And what does an alpha do? It leads. It has authority. It has position. It has the best perspective. And everybody else is subordinate to it. That's what you see in my community. My students that trade well, they're out there, they're doing it. And they're not seeking encouragement by anybody else. They are encouraging and showing as a shining example. This is what you can do too. Think about that. Consider who's influencing you. Consider who is holding you back. First and foremost, it's you. It's you. You're always the blame. Always. I was always the blame in the beginning, but I didn't want to see it that way. But when you finally break that cycle of encouraging future failures because you don't want to follow rules. When you break that cycle and say, okay, I'm going to be diligent and I'm going to follow the rules. It's going to be uncomfortable. It's going to be very hard for me to be strict with myself. And I have to do this and not do these things. I have to watch these videos and I have to take notes. And then I have to go into my own charts. I have to look for these things, not just look at his video. I've watched all your videos, ICT, and I'm still struggling. Right. I'm not surprised, because watching my videos doesn't do anything. It doesn't do anything. What do you do with the information that you watch? What do you do with the exercises and the things I tell you to practice and go in the charts and look for? Are you doing those things? Are you journaling? Are you back testing? Are you collecting data that shows these things occurring in the past? And you're studying them, staring at the examples and seeing how much time it took for those price runs to deliver to the profitability in terminus, and how often did it return back and show a stop out? Measuring how much all that information collectively over not just one sample set, but for weeks and months, as long as you can collect the data, and then make that a practice every single day. Every single day you should be going into your charts, not going on social media and carousing and palling around and comparing notes and high-fiving each other and stroking each other off. You should be in there in your own charts, keeping your nose to the grind and building statistical probabilities that what you're studying, you've seen happen many times. You're not entertaining these other people out there that want to have an opinion about what you're learning, about me, about how good they are. No matter how much I make or don't make, however much anybody else makes or doesn't make, is not making you any fucking money. It's not making you a better trader. It's not going to help you lose less. It's a distraction. It's a monetized attempt to get your attention. That's what social media is. I'm talking to you right now in a medium that I'm not getting paid for on a weekend day, when I could do this in my own YouTube channel. I could talk like this into a video. I could sit there and let you look at me like you were watching me in the Corbs interview. And I could do these every single week. And I could be monetizing them. I'm not interested in being monetized on everything. But if I'm going to do a lecture and it's my stuff, I'm going to put it up there where if I've made the time to take the video and put it together, YouTube's going to make money off of it, whether I monetize my channel or not. So I'm going to take 60% of the income. Thank you. I've earned it. It's my shit. But here, I'm doing it for free. And I already know that dozens of you are going to take it and put it on your YouTube channel. And I've already given you my blessing. I don't care. Do what you got to do. Get your grocery money. It's not an insult. It's not a jab against you. Whatever, you're doing the community a service. But I'm teaching you on how to think. That's what Twitter Spaces really are. That's the psychological aspects, the things that you need to use to recalibrate yourself or establish an initial calibration on how you're supposed to think about yourself, how to correct these internal problems that all of us have, and how to avoid falling into the traps of social media, character worshiping, influencer worshiping, never worshiping me, never holding me to a high standard of, I'm a goat, I'm a king. No, I'm just like you. I put pants on, I take my pants off the same way. I sleep, I eat, I get sick, I get sad, I cry. If my feelings are hurt and I lose somebody in my family, I have all those emotions that you feel. And in the beginning, I cried and I sobbed because I couldn't figure out how to do this. At 20 years old, I didn't have somebody encouraging me like this. I didn't have that. In fact, my uncle switched up on me, spent most of my teenage years convincing me that I should do this. And then when I started doing it and I started making money, he was offended by it. And he never encouraged me. He never said, man, that was amazing. Or I was awesome. How'd you do that? Can you show me how you did that? No, he didn't want that. So I didn't have what you have. You have a support structure. You have a community of like-minded people in our community that encourage one another. And they're all trying to see you be better. And I'm not talking about the people that are selling my shit. The people that have a mentorship that has my stuff in it, you should not be paying them. And I don't care if it pisses you off. I don't care if it pisses you off. You can create soft puppet accounts and say, oh, well, but you didn't do this, but you didn't do that, but you didn't do this. I'm out here creating. I'm creating. I've already done. You got to do. I've already said before, if I never do anything else, I'm done. I'm set for life. You aren't. You still have to do those things. You still have to keep making money. I don't. And here I am still teaching. Here I am still investing in all of your lives because I know what's coming. You don't. And if you can't be in a better position monetarily, psychologically, and emotionally, it's going to break you. And that means if you have children, they're going to suffer. I'm looking out for yours better and more than you are because you're completely distracted by everything else in the world. You have a job that you have to maintain. I don't. You're worried about losing your job, worried about making more money. Hope you get a raise. I'm not worried about those things. So I have a very objective perspective on life and how the world's working. I'm not distracted by things. And in trading, if you don't do things the right way, you can be distracted by the necessity that you think that you must have profitability every single time. You need to have an everyday model or you're not a trader. That's bullshit. That's a lie. You've told yourself that lie because you've heard someone else say it. And that person that said it, that told you that, is an unprofitable person. Profitable person.